What's going on, everyone? I'm Encore. This is Tomorrow Never Comes, and today's video I want to talk about big boys, big money getting into Bitcoin, what that means for Bitcoin, what that means for some of the financial instruments that these big players offer to the masses, and comparing the two in terms of if you were to have Bitcoin yourself or you give it over to somebody to manage. Someone who you feel quote unquote safe holding it for you, and that safety may be because you're not familiar with finances or you don't trust yourself, whatever the case is, or you don't think you're smart enough. All those lies, those are excuses to be used, but I want to kind of highlight some of the things here. So first and foremost, this is very big news here, is that Fidelity is to offer Bitcoin in 401k plans in a first for a major firm. Now, why is this important? Now, a lot of these big players are sitting on the sidelines, right? They're waiting for a regulation. These massive family offices, these big firms, they can't directly dip into Bitcoin itself for the most part. I mean, you get your grayscales and you'll have certain things like that, but they're still working on spot ETF, for those of you who may know what that is, but it's still in the process, right? So they're trying, they understand. And here's the thing about this. I always ask, right? What's the importance of this? Why would somebody or something, some entity of this size want to do anything with cryptocurrency? And Bitcoin being the leader, that would be the first place. Well, their clients must be asking. There must be a lot of upswell in terms of interest. So otherwise, they never make such moves. So very big deal. This is a very big deal. If this were to go through, I think it will go through, but these are all people who are sitting on the sidelines and they're trying to get in. And the 401k, I'm really kind of narrowing this down to the US. I mean, there are similar instruments in Canada and other places, but US is usually a big driver of markets as a whole, all markets, when it comes to stocks and crypto and things like that. So that's kind of where I'm going to focus on, mainly because if this were to happen here, very easy for it to transition over here into Canada or anywhere else. They're kind of the, I won't say the standard, but everyone kind of looks at the US and the US market and kind of tailor makes things accordingly. So this is pretty big news. All right. And I just want to kind of get in just Fidelity itself and what they're saying. So Fidelity believes that blockchain technology and digital assets are going to be a much larger part of the financial industry's future. Right? Big statement. I mean, that's just direct. Look, this is not a short-term play. We think it's a future play. So that's a very big deal. And here are some numbers. I think this is what's really fascinating about this. So getting Bitcoin into 401k plans would be a big win for the crypto industry and plan administrators, opening a vast market of retirement savings to digital tokens. Assets in 401k plans was recently at $7.7 trillion. Okay, I want to repeat that again. The assets in the 401k collectively sat at around $7.7 trillion. Okay, most of it's held in mutual funds and things like stocks and bonds. Okay, that's kind of where everything it just fit under that umbrella. But 7.7 trillion. Okay, and maybe that you're just like, okay, yeah, what about 7.7 trillion? Well, I want to go over here to Bitcoin. All right. And I want you guys to look down here where it says number 1. It says here Bitcoin. And here's the market cap of Bitcoin. It is under 800 billion. Okay. So under 800 billion for Bitcoin, 7.7 trillion sitting in 401ks. Okay. And for those who may not know, 401ks are like retirement financial instruments where employees can dedicate a certain amount, employers can match, just however the vehicle runs in your own country. Just think of it as a automated savings for your retirement. Okay, so 7.7 trillion across the board in 401ks, and Bitcoin here is 800 billion, just under 800 billion. In fact, the entire crypto space, if we look up here, right at the top, is sitting at 1.8 trillion. The entire crypto market. So this is Ethereum, Bitcoin, Cardano, all of them combined sit under $2 trillion. And we have 7.7 trillion just in 401ks. It's a lot of money. And if that were to flow over, it doesn't necessarily mean all of it's going to flow over, but some of it, a big chunk could, especially if it's being included in the 401k. So that's a very big deal. And this is something that should be noted. A lot of times this stuff doesn't get talked about because it's more, financial heavy in terms of maybe you need to have a base or people just aren't interested. But I want to highlight these things because this is a big deal. All right. But here's something else too. Okay. So yes, that's a positive that 401ks and the administrators within them would start to allocate some funds to Bitcoin. Great, right? Great for Bitcoin. But is it great for you? And here are some things that you need to kind of look at, right? So one are fees. And when you look at just numbers in isolation, you think it's no big deal. So if we look at, the fees of 401ks, in order for someone to administer them for you or maintain them, you're looking at 0.5% to 2%, which in and of itself doesn't seem like all that much, right? 0.5 to 2%. Okay, well, what's the return on your 401k? Well, typically right now it's 5 to 8%. Now, obviously, if they start introducing Bitcoin, the returns could be significant. The losses could also be significant depending on how mature Bitcoin is as they come into the space. Just a little point on that. If these big boys do come in, chances are there's less volatility in the price point, so you won't see such swings. But as of right now, where we stand is 5% to 8% annual returns, average annual returns for 401ks, and you got hidden fees of 0.5% to 2%. Okay, so you're like, yeah, okay, what's the point here? So I'm gonna take the best case scenario based on these numbers. You make 8% annual return. Great, right? And you sit here with the smallest fee, which I don't think they're going to correlate in terms of getting your best return and the smallest fee, but let's say they do. So we're looking at 7.5% return, which if you ask any seasoned investor, they're not going to be too happy with 7.5%. I believe the S&P 500 over the long term has averaged around 10 to 12%. So just sticking your money in an index fund, which doesn't charge you anything or very, very minimal, will give you better returns over the long haul. Okay, but let's just say, okay, so we're sitting at 7.5%. Okay, so but here's the thing. So you're going to get charged something for someone to hold your Bitcoin. And also remember, if someone's holding your keys, your private keys, they essentially own your Bitcoin. You don't own any. You are just investing in an entity that actually owns it. So there is that risk that something can happen. They could take it away. They could shut it down. They could freeze it. You don't own any of it. So you're going to earn a return which has fees associated with it, and you don't own it. You have zero freedom to move it around because it's not in your wallet, cold wallet or hot wallet. It's not yours. So there's always that saying in crypto, not your keys, not your crypto. That applies right here. Okay. And on top of this, so 7.5%, that's where we are right now. Well, what's the inflation rate right now? And you guys, I don't know if you guys can see this or not. There we go. All right. So the U.S. inflation rate is sitting at 8.54%. That number is actually much higher, but they like to cook the books a little bit here. But 8.5%, let's take it at face value. But you've made 7.5%. So you've actually lost money in the process, purchasing power in the process. The value of your money has decreased more than the actual gains you've made by being invested in a 401k. Right? So, and that's like best case scenario. All right, in terms of what's already being invested. So here, I want to point out to this. Well, you know what? We looked at the annual rate of return of a 401k, just as is, no Bitcoin in it. Well, what's the average rate of a return of Bitcoin? Well, since 2011, so the last 10 years, Bitcoin has been the best asset class in terms of annual return over that time period. And you're looking at the average annual return of 230%. This is 10 times higher than the NASDAQ 100, which is the second best performing asset class. So 230% that you can own yourself, paying no fees, sitting in your wallet, versus you don't own it. It sits in somebody else's financial instrument who will, quote unquote, maintain it for you and charge you a fee. And there's always that risk that they do whatever they like with it, freeze it, suspend your account. Who knows? You don't own it. So these are some of the things I really want to highlight. Yes, Fidelity coming in, or any other similar type of entity firm coming in and offering these services in a 401k is very good news. All this money coming in, all this money that's sitting on the sidelines, the 7.7 trillion is a big deal, right? It's going to normalize and stabilize the Bitcoin price, less volatility, more confidence. All of that is good news. But here's what I'm saying. I'm saying you can own it yourself and benefit from all that money flowing in over time. You're not paying anybody any fees. Take responsibility. And you can see, look, if these guys are moving in, there is massive value to owning Bitcoin. Massive. And when you control it, you can go anywhere as long as you have your keys, the passphrase. Okay? That's all it is. You can cross any border. You don't have to ask anyone's permission. It's yours. No one can censor it. There's no permission involved. That Bitcoin is yours. But as soon as you leave it with somebody else, look out. You don't own it. So while it may do well, you still don't own it. Okay, so I wanted to highlight this. I hope you guys found some value in these types of articles or news. I know it's not, it's not like, oh, I made 100x on my NFT. I know it's not one of those. But I think it's very important in terms of the long-term potential for Bitcoin and stabilizing and maturity of the price. This is something wholeheartedly, this is obviously not financial advice, but I strongly believe, and I follow what I believe. You get Bitcoin when you can, because at some point it's going to be well out of our price range. Well out of our price range. And always remember, you can buy $100 worth of Bitcoin, $50 of Bitcoin. It does not need to be one whole Bitcoin. Okay, that's becoming almost impossible for many at this point in time. So imagine 5-10 years from now how much Bitcoin could be. So remember, 7.7 trillion in just 401ks, and Bitcoin's market cap right now sits at just under 800 billion. That's a big difference. And if that money starts to flow, good luck trying to get one whole Bitcoin. All right, guys, I hope you found value in this video. Like, subscribe, share, hit the notification bell. Leave comments below and let me know what you think. Do you own any? Do you not own any? Would you be comfortable having Fidelity kind of handle your Bitcoin? Let me know. See you guys in the next one.